at least $30 a month. And hey Milo, welcome to the channel. The fourth easiest way to earn passive income is actually investments. Now this one is tried and true, it's nothing new, but again, it's because it works. Investments are the #1 way for people to build their wealth. If you take a look at Warren Buffett, he's now the 7th richest person in the world. And it's because he started investing at a young age. And we'll discuss this more on the channel, but the power of compound interest helps you when you're investing and helps you increase the gains in ways that you would have never imagined. Warren Buffett has a staggering $121.6 billion net worth, and the majority of that is literally just because he invested. Investing's tricky. Anyone can invest, but it doesn't mean you'll be successful. I personally made money investing, primarily in crypto, and I would love to show you guys more and discuss that more. Let me know in the comments below if that's something you're interested in. And I've seen crazy gains in crypto, anywhere from 2 to 70 times what I've put in. But don't get me wrong, I've lost a lot. The #1 rule in investing is don't put more in than you can afford to lose. You don't want to be in a position where you need a bet to go through for your livelihood to be okay. That's so dangerous. If you don't invest already, I encourage you to try it. Try saving at least $30 a month. And hey Milo, welcome to the channel. Say hey. This is my cat. But yeah, if you don't invest already, try it. There's plenty of ways to invest and save money. Take some of that savings and put it towards investments. And so what you can do is you can literally just save $30 a month by not eating out one time and put that $360, 30 times 12 into investments. This allows you to be able to enter into investing without putting extra money that you didn't have. You can start small and go from there, but I'll show you the power of investing. Investing is all banks do with your money already. So what they do is they use all the money that you have in savings and they just invest that and give you a meager return. The bank will only give you a 0.46 return. That's terrible. That means if you put that $360 into the bank, by the end of the year, you would have a whopping $376.56. That means you only made about $12 and change by just leaving your money in the bank.
Where's the rest?
But let's see what would have happened if you put that $360 into an investment. So the advice that I give with investing is invest in something you either already use or you hear about a lot. I can think of 2 things already. One, Temu. My in-laws love Temu, so they always talk about Temu. They're always ordering from Temu. So let's look at Temu and then Carvana. I always get ads for Carvana and Spotify lately. Let's look at those.
So if you can see my screen, this company, PDD Holdings, is actually the company that holds Temu. And so let's say we took our $360 that we saved throughout the year and invested in the beginning of January of last year. So let's find that. We would have bought at about a price of $85. Let's just call it 85. And let's say we put the 360 there. If we sold now a year later, it'd be about 144.50. And so if we took that and put it in our calculator to see what our multiplier would be, so I'd take 144.50, and that's the price we sold, divided by the price we bought. At 85, I get this 1.7 multiplier. And this is just what I use to find a quick number for what the profit would be. And so if I multiply that by the price that we invested, that 360 would have turned into $612, which is a great return. The average stock market has a return of 12%, so we beat the stock market with just that one stock. Let's do the same with Carvana. Looks like they had a big sell-off here. Bruh. So let's take that $360 and let's say we invested in January of 2023. We would have bought for about, actually we would have bought at a good time. We would have bought at about $5.50. So if we invested our $360 at a share price of $5.50, and looks like right now it's at, I'll just go by this number, 4203. Let's see what that would have gotten us. And so if I take 4203 divided by 550 was the number, we see our multiplier is 764, and you can actually multiply this by 100 to get your percentage. And so basically we would have gotten a 764 return on our initial investment, which means if we multiply that by 360, that 360 would have turned into $2,751. And that's a great return. That's actually one of the higher returns I've seen in the stock market. So let's compare that with what we would have gotten at the bank, which is that $12 return, and they probably made this with your money. And that just shows you the power of investing. And so had we left this in for longer, it could have gone up and we could have gotten a higher return, or also conversely, it could have gone down. And so you never know exactly, of course, but you can study the company, see what the latest news is, and judge from there. But in comparison to what you would have gotten from the bank, this is an amazing return. Even the $612 is a way better return than you would ever get from the bank.
The more we hold, the more things tend to go up. Meaning over time, if it's a good company, the price will go up. I don't mean it'll always go up. Typically, investment charts look like this. They go up, then they go down a lot, then they go up again over years. But if you zoom out at a stock chart, you can tell if it's a good company or not. Usually exponentially, stocks will get more and more expensive for good companies. Look at Amazon. It used to be in the teens and now it's in the hundreds. Maybe one day it'll be in the thousands. I can't lie, there is definitely a combination of luck and skill when it comes to investments. And so no one's gonna get it right 100% of the time. And the hardest part is taking your emotions out of it. They often get in the way and they either make you more greedy than you should be or more scared than you should be. This may not be a get-rich-quick idea, but it's one of the most powerful tools that we have in the modern day to accumulate wealth and acquire wealth. Use investments as a way to put your money to use. Again, this channel is about using money as a tool. Money makes an excellent servant, but a terrible master. So we're supposed to employ our money versus letting it rule over us and demand what we do with it. Stocks are one thing, crypto is a whole nother monster. Again, if you want me to go over that, I would love to. But let me know in the comments below. Crypto is a sector I deal with mostly. I personally don't trade stocks as much, but I do want to get into them eventually. If you're wise with investments, whether stock, crypto, real estate, you can truly see life-changing gains. Again, it won't be overnight. I mean, possibly you could get lucky, but don't count on just overnight success. Learn the skill of investing, learn the skill of trading, and it'll change your life forever. And no one can take that away from you. Also, I'm not a financial advisor, so don't invest more than you can afford to lose. Life is not worth putting your livelihood at stake for the sake of some extra money. Make sure you invest reasonably and responsibly. I said 4, but I'll give you a bonus one. Along with investments, the next easiest way to grow passive income is dividends. Dividends are great additional ways to build revenue. If you haven't heard of it, I'll break it down. Think of owning stocks in a company like owning a slice of pizza. I know that sounds weird, but I'll explain. If you own a slice of pizza, you're a part owner of that pizza place. So this pizza place is doing well and making a profit. And so dividends are like getting a share of the pizza place's profits. Instead of the pizza place keeping all the money for itself, it gives you a portion of the proceeds as a thanks for supporting them as they run their business. You can use these dividend payments however you want. You can reinvest them into more pizza, going back to that analogy, or you can actually just use them to spend on whatever you want. If you were to take that money that you got and reinvest it into the company, that not only strengthens your position in the investment, but it also allows you to experience more compound interest. And this ultimately just leads to you making more and more money down the road. If you enjoyed this video and you want me to go deeper into a topic I already discussed, let me know down below what topic and I'll happily make a video for you. If you subscribed, comment down below and I'll be sure to reply. Thanks so much, and let's get ready for the journey.